Starting our conversation now, and we're starting at the Interbank Forex market. We're looking at matters arising. Of course, yesterday we know that there was a situation where the Naira got up to 205 Naira to the dollar, causing a circuit breaker to trip off, and Interbank Forex trading was suspended. Well, of course, it resumed immediately after the central bank intervened in the market, but at the Interbank, the Naira closed at 202 Naira to the dollar. And so we'll be looking at this as well as some other of the issues that have actually come up in the Forex markets in recent times. I'll be having a conversation with the head investment research of AfriInvest, Mr. Ayodeji Ebo, and Mr. Oji Udemezwe. He is a financial and management consultant. Good morning, gentlemen, and thank you so much for coming on the program.
Thanks for
Good morning, Harriet.
So let me start with you, Mr. Ebo. What are your thoughts with regards to developments we're seeing at the Interbank Forex market? Like I said, the Naira fell and closed at 202 Naira to the dollars. A lot of people actually saw this, coming, but could it have been avoided?
Yeah, I don't think that would have been avoided. With the postponement of election, the polity was seriously charged before with a lot of certainty. But with the postponement for the next 6 weeks, which made it more intense, such that it increased the uncertainty within the economy. So what we saw yesterday was that a lot of the investors, or even just the normal Nigerian and the banks, are trying to bet on the Naira, because you expect that as for some of the foreign portfolio investors, based on the risk profile in terms of the political landscape, they would try to withdraw their fund or either reduce the inflow. So when you also look at the margin, the spread between the official rate and interbank rate, which is now significant, over 20 Naira, it also provides an incentive for people to round trip. So even individuals are trying to hold their funds in dollars. So as a result of that, all this accumulated to increasing the pressure that we saw there yesterday before the circuit breaker was used for the first time. And as at this morning, we've also seen the market, Naira has depreciated about 1.8%. We expect that it will not go further, such that the circuit breaker might also be used again.
The second time. Well, Mr. Udemezwe, it was expected, that the Naira would rise at the parallel and the black markets, but not at the interbank market, because as much as possible, they have to be in line with what the central bank dictates to them. And so for it to hit 202, it seemed as if somebody let their guard down.
Well, just like my friend has said, there is a lot of pressure now mounting on the interbank market. Of course, there are three major markets: the ARDAS, the interbank market, and of course the BDC, and then the almighty but unrecognized informal sector, the parallel market. Now, with the intervention of the CBN and all the regulations, in the past week, trying to, how do I put it, streamline demand at the ARDAS, so much demand is now shifting from, ARDAS to, the interbank market. Banks are having to deal with much more demand than they used to deal with before. Like he said, a lot of foreign investors who would wish to divest from the economy at this point in time are finding it difficult to pull their funds. And in fact, some weeks ago, many of them were beginning to raise their voice that Nigeria is applying some kind of capital control. And of course, our monetary policy managers came out to clearly say there's nothing like that. We are not trying to control movement of capital. We're just trying to manage our monetary environment to ensure sanity and decency.
Now, in trying to ensure sanity and decency, the central bank has said that RDAS and interbank funds should no longer be sold to BDCs and
to some other sectors, telecoms and the rest of that.
But how much of an effect, or how much will this curb the speculative demand that we're seeing at the market?
Yeah, that's even fueling the speculation, because with all of those announcements, people are feeling like CBN is coming to its wit's end, because you can't continue. Look at the foreign exchange reserves. It has fallen to as low as 33.5. Well, I don't want to sound pessimistic, but I think it may eventually get a little lower before things begin to get better. But the point is that for how long are we going to continue to use policy instruments to hold or to wage, the forces of demand and supply? Over a year ago, we have been playing this game. And right sometime early last year, you know, in my own little corner, I kept shouting, this is the wrong way to go. You know, allow this thing to devalue gradually. Otherwise, we'll take a quantum devaluation, which is what we're seeing now. In fact, from the Bloomberg report yesterday, some figures in forward contracts, you know, all those hedge contracts are already showing something around 253, 263. It's scary, but that's what people are thinking about Naira. So if investors cannot pull their funds, you know, it makes sense for foreign investors to come in here, if only they can come in at a particular exchange rate, move in their funds and enjoy the better, you know, interest rate and, you know, yield in this economy, instead of comparing to maybe a place like US where interest rates are still very low. You know, in the, you know, Eurozone, interest rates are going to also, you know, slump seriously. They're already low, but with the recent intervention, that's their own QE, which is going to begin in March, with about $60 billion being released every month. Interest rates are also going to fall there. Now, ordinarily, Nigeria should be enjoying some, you know, serious interest in terms of funds, capital flow into the economy. But if you're flowing your capital into the economy at some exchange rate, let's say 170 per dollar, and then by the time you now earn your 14%, maybe let's use MPR, for example, you earn 20% on your investment, which is impressive compared to your own local economy. But when you now want to move the money away, you find that you have to now buy the dollar at 220 or 202 or 196. It doesn't make sense anymore. So many of them have got jittery, and they want to divest or move away from the economy. And of course, the stock market, you know, of Nigeria today is over 50% dominated by foreign investors. So if they're all jittery and they want to move their funds, then you expect this pressure to continue. Aside from the fact that because of the election tension, people are still changing, you know, position from Naira to dollars to, you know, wage against that, you know, uncertainty that may occur. If the election happens, there's so much violence, and Nigeria becomes somewhere you don't want to stay in, they can have their money stay valued in dollars. These are all problems. And then, of course, the pressure, the oil price is trying to show some, you know, movement up. We are praying and hoping. We are praying and hoping that this little rebound we're seeing will be sustained, albeit it might be slow. If that happens, maybe we can begin to see the confidence of the monetary policy managers coming up in terms of...
Do you feel the same way too, Mr. Abel? Because you see, at this time, we know that Nigeria is not in a peculiar situation. It's a situation that most countries are facing. But because Nigeria is the largest economy in Africa and the 26th in the world and growing, it's expected that some of the policies that will come out at this time will be in a positive direction, just like what S&P said in their report, if you listened this morning to the headlines, that, you know, the policy reforms should now look at the economic challenges and work with it. So based on what Mr. Udemezwe has said, what are your thoughts? What do you think that the Central Bank of Nigeria should be doing right now? Should they enforce more policies? Should they tighten further on the BDCs, or should they relax?
I feel the problem, when you look back when it started, it started after the exclusion of some certain goods from participating at the official window, which is like a demand shift to the interbank window. So this has continued to put much pressure. And when you continue to see, like I said earlier, the spread between the official rate and the interbank rate has fueled a lot of banks, financial institutions to round trip to buy this dollar. Yes, we are aware that CBN has been monitoring and has also said it will sanction any bank that is found wanting. But when you also you look at the JP Morgan has also placed us on negative watch, which when you look at the fund that may eventually may eventually go out if that's about 5.4 billion if eventually we are delisted from that particular, from the JP Morgan index. When you look at that, it increases the pressure. And when people look at the forward contract, when you look at based on the current reserves, which has been depleting, and the potential to even accrue, to increase the reserve with the decline in oil price, when you add all these numbers together, the outlook is going to be very challenging. And these are some of the things the investors have priced in before making them to take position at the present time, instead of waiting to see how the polity goes in the next 6 weeks.
Now the central bank. Okay,
Central Bank, I wanted just to say that we've got it somewhat wrong in the past months, just trying to defend the naira, and I think it may be too hard to suggest, but I think it's proper for the central bank to begin to gradually reverse itself on many fronts. Because of this same fight to defend the naira, we have got interest rates so spiked up. CRR is at 75% for public sector funds, 20% for private sector funds. MPR has gone up. So in trying to defend the Naira, we have made it very difficult for the real sector to thrive because lending rates have all gone up. And manufacturers, and we're going to get to that very soon, those who are meant to rescue the economy at this point in time cannot even do much. People are shy of borrowing, and when they borrow, they doubt if they will be able to pay back. So we've, how do I put it? Hit up the economy with this same battle to save the Naira. So I think it's high time we actually allowed the forces of demand and supply to begin to take, even if it's gradually, we must gradually begin to devalue. That's the reality. Let's devalue, and if we devalue, one of the benefits, if we are going to be true to ourselves, is that Nigeria will actually be able to raise more money, more Naira, for whatever little amount of foreign exchange they raise from the little profit we have in oil now. You raise more Naira to be able to fund your budget. That's one benefit we'll see, among many others.
Yes, I won't, we need to be careful about devaluation, where it's inevitable based on the current circumstance which it's happening now. But Nigeria, as an import-dependent economy, its effect on the average masses is going to be significant. We import almost virtually everything. So when you look at the implication on that, on the prices of goods, is really going to affect the purchasing power of every Nigerian. So when on the average, apart from trying to increase the revenue that government gets from it, it's going to really affect the average Nigerian, which you need to take into consideration. I will suggest, like AfroInvest, we suggest that if CBN can also reverse and enable reverse the policies that excluded a lot of the importers from participating at the official rate, because if they can reverse that and make them participate at the CBN rate, it will leave little window for round tripping. Because once you know that if as a bank, when you buy, there's nobody to sell to. So if you know that most people, we are saying like a one-way quote, when you come to the CBN to participate, you know that you have filled most of the demand at that particular window.
That's where the issue is.
You feed most of them at that particular window, then there will be no opportunity or no incentive for you to hold the dollar. So, but as long as there's no sufficient liquidity, you just sell a little amount at the official window, and you wait for the banks to sell to the BDC at the current rate, which is even outside the upper limit of the 176 naira to a dollar. Then that will continue to be an incentive even for investors to take speculative position on the naira.
Remember, at some point, CBN was able to successfully close the gap between the official rate, window and the prior market.
True.
It closed up at some point. It wasn't even up to 3 to 4 naira. At some point, 3-4 years ago. So they had been able to achieve that. But even when they achieved it, they were not able to, collapse the whole market and say we would be able to meet everybody's demand. By the time CBN will want to allow everybody, buy officially, of course, you find that when they come to the market and demand far outstrips what they can supply, speculation will also continue to thrive. So what I'm saying is that in delaying this process of saying, because our economy is import dependent and any little devaluation will impact prices, it's just a matter of time. Now, our foreign reserve has gone down to the point of just covering barely 7 months of imports. If we continue in the path we're going, and it gets closer to 3 months, 4 months, the risk, impact on that in the economy will be huge, and speculation will be even more massive. So what we're saying is, yes, if we devalue, it will affect inflation, but we can use other fiscal and monetary policies that can reverse the impact of that, bring down interest rates. Everywhere around the world, in China, in Australia, in even India, they're all trying to, take it easy with the monetary tightening. Everywhere interest rates are coming down gradually to drive the real sector, to drive domestic demand. Okay? So Nigeria needs to look at, this monetary policy thing, this lever we are using all the time. What can we do to begin to slow down on that and see how we can drive the real sector? To provide funds that are cheap enough for people to do business with, begin to find a way to curtail importation of foreign goods and use our own, as we have done in cement,
Mr. Udeme,
we can do in rice and other sectors.